The U.S. has what's called a fractionary banking system. If you put $1 in the bank, that bank can loan that dollar out to 8 different people. So your dollar now becomes $8 in loans to other people. The bank makes interest on those loans and pays you a small fraction of what that interest is. So you might be earning 1%, say. They're making 5% on your money to 8 different people. So they're making 40% on your money and they're bringing you 1%.
Welcome to the Big Money Influencers Podcast. We talk with top influencers and experts to help you navigate and prosper in your business. It's all about creating wealth, legacy, and an online presence. Here's your host, Ceanne Livingston.
I want to welcome entrepreneur Rick Collins, and he is the owner of the Go Financial Solutions. Go ahead and take some notes because he's going to drop some amazing information on how to retire and how to build your finances so that you can be confident in what your future brings and building wealth and building legacy in your life. In a nutshell, what do you do?
Well, thanks for having me on. In a nutshell, I help people learn how to use financial products strategically so they can build a retirement income safe from taxes and inflation and market risk while still having access to that cash anytime they need it. I help business owners especially come up with a way to actually retire from their business and then if they want to sell their business one day, great, but they've got that nest eggs ready for them whenever they need it.
You kind of answered this, but do you solve a particular problem for your clients outside of helping them to retire?
Yeah, my clients range from moms and dads to single parents to executives to business owners. And the problem I solve for them is I help them protect the money. It's what we call protecting the money. So there's always a cushion and a barrier between your money and anybody who might need it, want it, or sue you for it. As in, file a lawsuit. It happens more than you would think, but products we use are safe from bankruptcy creditors. They don't count towards your assets in financial aid for students going to college. It's really a unique way to avoid banks and protect your money.
Who are your ideal customers?
My ideal customers are business owners, anywhere from startups to 6 and 7, 8-figure businesses who want to use a portion of their money they're already spending on expenses. They can route it through one of my products, build that cash war chest to use whenever they need it, and then still have access to the money. So basically, if you've got profit or cash flow in your business, you can use what I do to extend that and multiply it 2 or 3 times over in a period of 7 to 10 years.
What age do you recommend someone start doing this type of financial investing? So, bringing these solutions into their life.
The best day was yesterday, and the next best day is today. I'm a finance guy. I've got a degree in finance. I've got an MBA, and if I'd have started doing this 30 years ago, I wouldn't be much further ahead than I am now, but it's never too late to start. I have people that are in their 30s with a new baby that they're going to pay for college, basically by paying their own mortgage, and they're going to write a check for college in 18 years. And I've got business owners who are in their 50s who start now and run a $15,000, $20,000 a month through their policy, and they're going to walk away in 7 years with $500,000, $600,000 in cash, plus multi-million dollars in life insurance benefits that will change their family's trajectory forever. So really, it's any age, but the best time to start was yesterday.
That's a good answer. I like it. How are you different than your competitor? Like if I was out there, like I have a few friends, business associates that do similar work, what would make me work with you? What can you offer me that might be different than other people?
I partner with some very interesting people. A guy named Josh Tolley is the owner of the company I work with, and he's a nationally syndicated radio personality. He's wrote a book about finance, best-selling book called Evangelpreneur. And we have a specific type of product that really nobody else that just sells life insurance offers. We actually have to tell the insurance company how to use their own product, but we've invented a way that strategically place money in an insurance policy that gives them what they want. So you're not going to find this in 99% of insurance or financial people that you talk to. There's literally no market risk, 0 tax on your earnings, and you can add the money anytime you want to with no fees or no penalties for withdrawing it early. So it's
Like
rare to find that kind of package in the marketplace.
That's excellent. What type of, I'm not to retirement age yet, but it's definitely something I need to start looking at. What type of money or how much money do I need to bring to the table to start out investing in my future?
You could start with $100 as a start, but what I suggest people do is, for example, if you want to save $24,000 a year. So say you've got a $2,000 a month rent payment or mortgage payment, but you want to try to save $500 or $600 for your future. Go ahead and put your full amount of that $24,000 a year into this policy. And at the end of 7 years, you'll have $173,000 of cash value and $861,000 of life insurance. That cash value you can touch anytime you want to. You can take loans against the cash value online with no approval process. It's your money. You own the policy. You can get that money whenever you want to. But $2,000 a month adds up to a lot of money in 7 years. I've got people that are running $100,000 a year through their policy, and that's going to drastically, change the numbers. But the way it works, at $100,000 in 7 years, you have almost $700,000 of cash value, $3.4 million of insurance. So pay attention to that. 7 years, $100,000 is $700,000. And at the end of 7 years, you've got $698,000 available. So it really costs you $2,000 to get $3.5 million of life insurance plus liquidity to your cash. So it really compounds the impact of true interest, true compounding interest every year, builds cash. It'll pay you forever until you decide to cash it in or until you die. So how would you like to be, 7 years from now, having a policy that pays you $30,000 a year without having to pay any extra money into it and have no taxes on that $30,000 when you need it the most? That's the kind of policy I'm talking about with this policy.
Yeah, you had me at compound interest. I remember when I was probably in college and I learned about compound interest. And I'm like, where can I sign up for that?
A lot of people talk about compound interest in the stock market. The stock market is not truly compound interest. If you buy a stock at $100 and it goes to $110, you don't get that $10. You don't get that $10 until you sell it. And then you pay a stock market fee, a transaction fee, and you pay taxes on your gain. This product pays a dividend every year, and it adds to your cash value. You earn interest on that new amount every year. So it's true compounding interest.
Learn the secrets entrepreneurs can use to create wealth and legacy. Discover exactly how the top 1% are building financial success, wealth, and a legacy quickly in their business. These are the only secrets you need to create wealth and legacy when it comes to building your online presence. When you visit bigmoneyinfluencerlive.com, you will get free access to the exclusive Big Money Influencers Live business kit. It teaches proven secret strategies that successful entrepreneurs are using daily to create wealth and legacy in their business. Foolproof methods established business owners are using to live and build wealth and legacy. We know you're busy, so we have convenient audios, which include foolproof methods established business owners use to build wealth and legacy. Easy to follow binder notes. And if you're ready to 10x your online presence or ready to take your business online, you can book a call and discover how to get started. Visit bigmoneyinfluencerlive.com. That's bigmoneyinfluencerlive.com.
So you talked about life insurance and you talked about paying into a retirement fund. Is that money, not the life insurance, but the other finances, is that like, if I was to die, does that go to my kids? Does that go down too?
Okay, the policy that we use, you have a life insurance amount that you buy with your premium, and then you put extra money in this policy, and it earned interest along with everybody else. So you're buying life insurance as a vehicle to store your cash and grow it tax-free and risk-free. And that's the vehicle we use. It's just a bucket that, oh, by the way, when you do die, your beneficiaries get, 6 or 7 figures of money tax-free, and you really protect your family going forward. But, the main goal is to give you cash growth and liquidity while you're living so you can enjoy it.
Nice.
There's that benefit of, a couple $1 million to your beneficiaries later.
Somebody wants to work with you. How do they find you?
Well, at the risk of offending anybody, I am an LSU graduate. My company is Go Finance. or Go Financial Solutions. My website, it is spelled GEAUX. My website is www.geauxfinance.com. That's gofinance.com. You can also call me at 936-274-2220, 936-274-2220, or gofinance.com.
Wonderful.
I look forward to, meeting new people, talking about their goals and what they want to do, and designing a lifestyle that they want to live, not that they have to live. So that's what I like to do to help people.
Wonderful. Do you have anything else that you want to share? Any nuggets, any strategies that you would recommend for the audience?
Yeah, first of all, don't put your money in the bank, because you don't own your money and you can't control your money, and your bank can decide what you can and cannot spend your money on. They're paying you less than 1% interest, and you're paying tax on at 20 to 30% on your interest. So you're making less than 0.25% of interest with inflation. That's either inflation rate they state is 3 to 5% a year. It's really more like 10 to 15% a year if you keep the market basket the same, the way they calculate interest. So if you got your money in the bank, you're losing money every day. As taxes go up, we got to pay for the COVID relief and all the spending we're doing right now. Taxes are going to go up. If you have a 401k, it's a tax trap. You're going to pay tax on every single penny you draw out of that when you're retired, and you need every single penny you can get. You're giving 30% to the government. My program, you pay zero taxes on any money that you take out of your policy. So don't depend on the government to take care of you. Social Security is iffy at best, and they're going to keep raising the Social Security retirement age. I think it's 65 or 67, and it's going to be in the 70s probably the next 10 years, because Social Security is close to broke, and they're going to make it harder to collect on it. So don't count on the government. Don't count on Social Security. Build your own vault of cash so you can control your destiny, and you have choices. When you're tired of working a job, or your business is getting hectic, you want to sell out and retire and do something else, you have the ability to make choices and not have to make sacrifices.
Absolutely. That's great advice. Thank you, Rick. So you talked about banking. A lot of people don't know how banks work. Can you explain to me and my audience how banks actually work?
The U.S. has what's called a fractionary banking system. If you put $1 in the bank, that bank can loan that dollar out to 8 different people. So your dollar now becomes $8 in loans to other people. The bank makes interest on those loans and pays you a small fraction of what that interest is. So you might be earning 1%, say. They're making 5% on your money to 8 different people. So they're making 40% on your money, and they're bringing you 1%. The fractionary lending, people say it's FDIC insured, only up to $100,000. And could you imagine if there was a banking crisis and everybody wanted to get their cash out? FDIC would be broke overnight, and we would be back to bartering and trading, stuff for stuff or services. Having money in the banking system is just inherently risky. You've heard of people being deplatformed and censored for hate speech. If you ever look at your bank account state regulations and policies, it's definitely scary. Most people, when they're opening a bank account, they just click next, 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 next. If you ever actually read it, the banks have all the power to make any changes they want to your banking arrangement. They can determine how you spend your money and what is acceptable versus not acceptable. For some reason, you want to do something with your money that the bank doesn't agree with, they can just freeze your money. There was an article the other day about a woman who allegedly made some anti-Muslim statements. She lost access to her Instagram, Facebook, and her bank account was frozen. Scary.
That's really scary.
Whether she did or not, the bank shouldn't be able to seize somebody's money just because of something they might have said or they allegedly said. That's another reason I don't like banks as a way to make money, because if you put your money in the bank, you might as well put it in your mattress or a hole in the backyard. You're not going to make interest, and you're going to pay taxes on the gain, even though inflation eats away that gain. So the banking system, we have inherently low rates because the Fed is manipulating money and to keep interest rates low so housing and loans will take off, and it's propping up the economy. We've done it for decades. Regardless of the party, in the presidency, the banking system is flawed. I would rather have something that's guaranteed in writing from a 115-year-old company. And oh, by the way, I own the account and I say how much money I want and what I want to spend it on.
That's a wealth of information.
I would encourage everybody to take control of your future. And starting a business is definitely one way to do that. being strategic with the money you make in that business. It's all not about what you make. It's about what you keep. Definitely come talk to me about a strategy to keep more of your money for as long as you want and have choices in your future.
Well, thank you so much, Rick, for joining us. I appreciate you.
And I hope I helped some of your viewers, and be glad to help anybody that wants to reach out.
Definitely reach out to Rick. He has a wealth of information. He's an amazing guy and he's totally trustworthy and cares about people.
To discover the secrets entrepreneurs are using to create wealth and legacy, visit bigmoneyinfluencerslive.com. And here's a big ask. If you love this podcast, will you take a minute to subscribe, review, and give us a 5-star rating? Be sure and share with your friends and family. And thank you for listening.